In today's video, I'll be giving you an update on the performance of my Wealthsimple Invest portfolio to see how it's been faring amidst high interest rates and poor market conditions overall. Now, I think we can all agree that the past year or so hasn't been all too kind to the equity markets, and basically anyone who is invested in the stock market has seen the value of their portfolio temporarily decline. Unless, of course, you're entirely allocated to oil and gas stocks, but chances are that's not the case if you're an everyday investor. That said, even considering temporary setbacks, it's important to remind ourselves as investors here that market corrections and even larger downturns are completely normal and really to be expected over a long-term market environment. And so then comes back the importance of proper diversification and the reason why a portfolio like what Wealthsimple Invest has to offer could potentially be beneficial for a certain type of investor who's really looking for that more hands-off and passive approach to their investing. So with this in mind, how has my Wealthsimple Invest portfolio performed over the past 6 to 12 months? That's what we'll be covering in today's video. Alright, so if you aren't familiar with Wealthsimple Invest, it's basically an automated investment platform that creates a portfolio for you utilizing low-cost exchange-traded funds based on your investor profile and risk tolerance. So if you're, say, someone who's 40 years old with a lower risk tolerance, well, of course, the ETFs that are purchased and held on your behalf will have an entirely different allocation than someone who's, say, in their mid-20s with a higher risk tolerance and longer investment horizon. And this is then reflected over into a 10-level risk tolerance scale, essentially, with 10 being the highest level of acceptable risk, meaning essentially a much larger allocation towards equity positions over fixed income, but we'll be taking a look at this more concretely once we're actually within the platform. Now, a couple other things to consider here, depending on the size of your investment portfolio within Wealthsimple Invest, the management fees charged are going to be different. So any balance under $100,000, you're looking at 0.5% in management fees annually. Once you exceed that $100,000 threshold, those management fees drop to 0.4%. So basically, since my account with Wealthsimple Invest is below $100,000, as we'll be seeing shortly, well, I'm paying that 0.5% in annual management fees for this account specifically. And so just for sake of example here, if you had, say, $10,000 at 0.5%, that is equal to $50 annually in fees. Additionally, it needs to be mentioned here that that 0.5% management fee is Wealthsimple Invest's fee, which is charged above what the exchange traded funds themselves charge on an annual basis. But we'll be looking at all of these fees individually within the platform once again. All right, I think at this point, what would be the most beneficial is to just jump into my own Wealthsimple Invest portfolio so we can take a look. I'll see you inside. All right, so within the Wealthsimple Invest account here, we can see that the top balance is just shy of $30,000. Now, this is including the RRSP as well as the LIRA. The LIRA is relatively new in the last year because I ended up quitting my job and they transferred a balance for my retirement account. Now, we're going to be specifically concentrating on the main RRSP here because this is what I've used previously for updates on the Wealthsimple Invest performance of the portfolio. So yeah, we can see here, this is the total value of the account over time. We can see the fluctuations as I've made withdrawals and deposits. We will click on main RRSP here, and this will bring us to a more specific page relative to it. Now, we can see there are 3 different sections. We have the top bar where we can see the name of it, the account value, and returns over time, as well as the right-hand section right here, which will show you some deposit insights, contribution room, but then also the portfolio itself. So in this case, we have a 90% equity, 10% fixed income and gold split, which is on a 10 risk level, which in parentheses here, we can see growth. Now, as I mentioned earlier, Wealthsimple Invest works on a 10 risk level scale, this one being the highest risk. So if we click on change, we can see essentially a visual sort of representation of what that would look like over time, right? So higher risk, we're going to have larger fluctuations. Lower risk, it's going to be a lot smoother, but less probably growth over time as well. All right, so we're just going to leave it at 10 as is, and then we can see this is sort of like an expected growth chart. That's not really relevant, but history here is a lot more relevant, where once again we can see withdrawals as well as deposit over time and growth of the portfolio balance, which is the orange line fluctuating over time. We can see, let's say over the past 3 months, we can see it went from around 14,370 up to a max of 15,000, just shy of $400. Now, moving forward, we can also see under history recent activities such as dividends and fees paid. And then finally, the account performance, once again showing us simple rate of returns, return on a dollar basis, and the net deposits, right? Which net deposits are of course different than the actual growth and value of the portfolio. And then finally, actually going back to plan, if we, click on holdings, well, we can actually see the portfolio holdings breakdown for this one in question, right? Because again, these are not funds that I personally selected. Wealthsimple Invest, like any other robo-advisor platform, is going to build an investment portfolio and consistently rebalance it over time as the markets shift and as you make deposits. So in this case, we can see just shy of 30% is US equities in the VTI ETF, 23% in international equities, 16% in emerging markets, and then only around 11% actually in Canadian equities. Now, when it comes to the fixed income and gold, we have ZFL at around 6.6%, and then gold actually just shy of 3%. This is a gold trust essentially. It's an ETF like any other, but that actually just holds gold bullion. And then moving back up, we can see the market value for each one of the ETFs, the shares held, and then finally the performance for each one. And then yeah, it's been around 2.5 years at this point that I made that switch from the risk level of 4 out of 10 over to a risk level of 10 out of 10. Not entirely sure why I had it on 4 out of 10 initially when it was set up, but I made that change around 2.5 years ago. And so that is when the 90-10 equity split came into effect within this account. So since the S&P 500 is a well-known benchmark equity index within the stock market, I think it would be fair to compare the returns of the Wealthsimple Invest portfolio on a 10 risk level to say if you simply just put your money in the S&P 500 and let it ride out over a couple of years. So since roughly March 7, 2022, just over a year ago at this point, the S&P 500 has grown by roughly 2%, considering the recent positive movements in the market. Of course, this doesn't take into account dividends and their reinvestment back into the portfolio though. Now, on the flip side, the Wealthsimple portfolio on risk level of 10 at a 90-10 split has gone from around $14,857 in value to $15,486 in value, meaning growth of roughly 4.6%, taking into account dividend reinvestment and management fees charged by Wealthsimple. So with all things considered, the portfolio isn't necessarily performing poorly by any means, even though a 4.2% return isn't anything stellar, but when comparing it to the most basic market index there is, the S&P 500, well, it paints a very different picture of how the portfolio's performed in the recent market environment over the past 18 months. That has been quite difficult on most portfolios. Now, realistically, do I think the Wealthsimple Invest portfolio has been worth it over the years since creating the portfolio back in roughly 2018? Well, I have made it quite clear in past videos on this very topic that returns provided by this portfolio have never blown my expectations out of the water. Rather, they tend to follow general market movements with that 90-10 split now at least, but with a bit more hedging towards some fixed income as well that tends to smooth out equity fluctuations. So will this type of portfolio make you rich? Definitely not in the short term. Rather, I view this type of product as a way to rather maintain wealth and create some income along the way. But as we've seen over those past 3-4 years of me making these portfolio update videos for all of you, the performance has been relatively anemic, and over the long term, I probably would have just been better off investing in the S&P 500 alone, or potentially even an asset allocation ETF where fees are quite a bit lower. It has, however, been a very passive option for investors that do really want a hands-off approach to investing, as it does rebalance the portfolio to whatever split you've set it to every couple of months. That being said, if I was new to investing right now, I'd open a Wealthsimple trade account that allows you to buy and sell ETFs yourself, fully avoid fees, and ultimately just have more control and flexibility over your investments. So if you do want to try that out, I'd recommend you check out the 2 links down below in this video's description to first and foremost open a Wealthsimple trade account. You'll get $50 for free to get started when you deposit and trade over $150 worth of stocks or ETFs. And then also head on over to my fully free stock market investing course, where you'll learn everything you need to know about DIY investing in the stock market to comfortably build a portfolio suitable for your needs as an investor and navigate the stock market with confidence. Make sure to check out those links, subscribe to the channel, and I'll see you in the next one.